Growth companies like Tesla and ARK Invest are great ways to grow your money quickly. If you look at ARK's innovation ETF, ticker symbol ARKK, compared to the S&P 500, you can clearly see that it offers much greater returns. Tesla is even higher. But the main problem with most growth companies is that they have little or no dividends, meaning that they don't provide cash flow for you as an investor. This is why my investing mindset involves concentration to build wealth and diversification to keep wealth. I'm in a financial position that my stock portfolio does not make up a significant portion of my net worth, and I don't rely on it for monthly cash flow. But if you can get to a point in your life where you can build a sizable investment portfolio by concentrating in a small number of growth stock companies, you can now focus on using your capital to start generating cash for you to live on. Dividend stocks mean cash flow. You can live off these dividend payments, and it's important not to touch the principal or the initial amount invested. This way, your principal can still grow over time while constantly paying you money. The bigger the principal gets, the bigger the dividends. You can also start reinvesting your dividends if you no longer need the full amount in order to live. This will cause your future money and dividend payments to grow even more. I don't want to waste your time, so here are 9 great stocks that pay dividends: Apple, Microsoft, AbbVie, Crown Castle International Corporation, Caterpillar, Digital Realty Trust, Automatic Data Processing, Cisco Corporation, and Realty Income Corporation. Please do not just invest in these blindly. It's important that you do your own research, as I'm not a financial advisor. The great thing about investing in these companies is that you can get monthly dividend payments when you combine them. To put things into perspective, the S&P 500 grows by an average of 10% per year. Let's dive into some numbers for these dividend-paying stocks. At the time of this video, Apple has a dividend of 0.67%. It's pretty low, but as you can see, its growth rate is fantastic. In the last 5 years, the stock price has grown by an average of 33% per year. In the last 10 years, 27%. And in the last 20 years, 29%. Microsoft has a dividend of 1.04%. In the last 5 years, it has grown by an average of 31% per year. In the last 10 years, 23%. And in the last 20 years, 8%. This number is low mainly due to the dot-com crash in the year 2000, but it has been on a tear ever since. AbbVie has a dividend of 5% and has also grown at 17% per year in the last 7 years since it went public and 13% per year in the last 5 years. Crown Castle International Corporation has a dividend of 3.11%. In the last 5 and 10 years, it has grown by an average of 15% per year. And in the last 20, the number is smaller at 9%, since it was also affected by the crash in the year 2000. Caterpillar has a dividend of 2.38%. The low growth in the last 10 years can be traced back to the year 2014 when the price of crude oil dropped significantly. But since then, it has also done well at 20% per year for the last 5 years. Digital Realty Trust has a dividend of 3.28%. Growth has been very respectable, ranging from 10 to 16% in the last 20 years. Automatic Data Processing has a dividend of 2.13%, with the price growing by 13 to 15% in the last 20 years. Cisco Corporation has a dividend of 2.45%. The low growth in the last 20 years can be traced back to it taking a big hit during the 2008 housing market crash. Since then, it has shown promise and resilience during the 2020 crash. Realty Income Corporation is a favorite stock amongst retail investors due to its high monthly dividend, yielding 4.56%. That's the reason why I put it on this list, but as you can see, the stock price hasn't grown very much in the last 20 years due to it being hit hard by both the 2008 and 2020 crashes. The really cool part is that if you invest in these companies, you will get paid monthly dividends. These are the stocks that pay their dividends in specific months of the year. This is January and February, March and April, May and June, July and August, September and October, and November and December. This may look complicated, but all you have to do is invest in these specific stocks, and these are the months when you get paid, and by which companies. Again, you need to base your decisions on your own reasoning and take responsibility for them. I'm just showing you how this would work. These stocks are also spread out between 6 different sectors. tech, biopharmaceutical, REITs, which stand for real estate investment trusts, construction, wholesale, and business services. So if a particular sector gets hit hard in a crash or correction in the market, your money can be protected. I choose to concentrate my investments into Tesla. So to summarize, I'm concentrating my investments in order to build wealth, to make sure that in the future I can diversify to keep the wealth that I built from concentrating. I plan on holding Tesla stock for several years before doing this. Thank you so much for taking the time out of your day to watch this video. Please leave a comment below, like the video, and subscribe if you like what you see.